That's what I'm all about. I like to provide an experience. I believe that multifamily and this business is not just housing. It's a service business. And if you provide a good service and you can do something really special for people, they feel a lot better about writing that check each month and handing you that check.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with, once again, Steven Silverman, still alive and kicking into the new year.
Definitely kicking and looking forward to it. It's going to be a different new year.
Alive, maybe not so much so.
Well, we'll discuss that afterwards.
It's kicking off into 2021. I think it's going to be a good year for us, Stephen. The light at the end of the tunnel for this disease, the pandemic, it's not close, but at least we can see a pathway out. And we can start to see some of the business starting to open up a little bit again. We hear all the death and destruction happening on the office market, for example. I mean, we've had a lot of folks talk about how terrible the office market is. But, Stephen, it's never as bad as what is portrayed, right?
Well, listen, it always has to do with location and what type of office it is and where it is. There's certain parts that are in demand and they really weren't affected.
I closed some of my largest office leases in my career last year. And then just this week, one of our agents did a $2.5 million office purchase. He was the listing agent on that deal. It was on the market just for a few days before it sold in a highly desirable location. So the death of the office market, along with some of these other asset classes, has been greatly exaggerated. Yes, there's going to be pressure on the market. It's not going to be off to the races until we can solve this pandemic situation. But I just believe that companies are chomping at the bit to try to get their people back into a room again and help build culture and try to continue to build their operation. I mean, Zoom is a great tool. It allows you to be able to work from home more, but I don't think it's going to be a tool that's going to allow workers indefinitely to work from home. You've got to be able to get people together for networking events and for culture building and for creative purposes. It's just Zoom is not the same. And so, the office is going to be the slowest to come back, but we're seeing sprouts of life out there.
Office will not go away, but at the same time, there will be changes. I mean, people have learned to work a little bit differently, and we'll see some differences, but office is still alive.
Yeah, we will see some sort of a hybrid, I believe, where maybe people aren't coming in every day, but they're coming in 2 days or 3 days a week. And then the remainder of the time they're working from home. But I at least for us, I can speak from personal perspective as well as some of the clients that I speak to on the brokerage side that they really don't like not being able to see their employees every day, interact with them. It's not conducive to team building. Stephen, we had a review.
Let's hear it. Good or bad?
Johnny 366 says, really enjoy the Invest Florida show, learning a lot about the Florida market. Best regards from Switzerland. Johnny 366, we really appreciate you taking the time to complete that review. It helps us tremendously as we work very hard producing this show. Every guest that we contact wants to know, is their voice going to be heard? Is it worth the time to come on the show with us? And so when you guys take a few moments and complete a review on iTunes or even go on to our website, theinvestfloridashow.com, and leave a comment or a message, it helps people realize that they're just not screaming into an echo chamber, and there's some people out there that could help them grow their businesses, and hopefully you're getting something out of it too. So it's a mutually beneficial situation. If you guys do take the time to go to the iTunes store or to our website and leave us a review or a comment, we'll definitely read it on air, and it helps us to improve the show, keep the show going. Steve, we've got a great guest today. He's been with us before.
He certainly has, and it's a pleasure to have him back because things have changed for him, and he went into business on his own, and it's going to be interesting to hear about his entrepreneurship and what he's achieved.
And everybody's clamoring all the time for multifamily information. It's probably our largest listener base is folks investing in multifamily. So hope you guys enjoy this. Jason is a great guest.
Today we have with us Jason Schaller. Jason is the founder of the Schaller Group, based in Winter Park, Florida. The Schaller Group is a forward-thinking design, construction, and real estate company focused on the redevelopment of multifamily, hospitality, and commercial assets. The Schaller Group syndicates multifamily investments and provides outside consulting and advisory services relating to design, construction, due diligence, marketing, branding, sales, and asset management for owners and investors nationally. Jason, welcome to the Invest Florida show.
Thank you very much for having me, Stephen, and thank you, Eric. It's a pleasure to be back here, and I really appreciate it. Thank you.
Jason's a returning guest.
He's a retread, as we call them. No, but hey, we're excited to catch up with you. You know, you and I follow each other on LinkedIn, and I saw when you left McKinley and started to do your own thing, and was excited to see you complete your first couple of deals. So why don't you tell us a little about what you've been up to and what you're working on? Yeah, thanks, Eric, man.
I think when we met the last time might have been somewhere around early 2017. And, I'd been there with McKinley for 18 years, 4 months and 16 days. That was my last day.
How many hours?
And, 18 years, 4 months and 16 days. That was my tenure with the former company, and launched in early, really, I just took a little bit of time off, but then launched my own business at the very end of 2017 and really started getting some traction in 2018. Started right away doing a lot of design and renovation work and working with other people and looking at deals. And as things started to evolve and I started to get out there and really start making a name for myself, started putting together and partnering with my real estate partner on the syndication and the sponsor side to put real estate syndications together for multifamily. And we are growing a portfolio throughout Central Florida now, and really doing what we've done in our past, but doing it for ourselves. And then out there making a lot of changes and a lot of nice improvements to a lot of communities throughout Central Florida, just on the fee side for the Schaller Group as well. And so you were with McKinley, you were doing mostly handling the renovations here in the area, correct? I did. I ran operations for everything. At one point, my track record with that company started as a summer job working in the maintenance field. It was a construction job, basically. I was hanging drywall and framing for a summer, and I was trying to play rock and roll music, and I thought I was going to live my life doing that. And one thing led to another. They said, "You're not leaving." I said, BS. And next thing you know, almost 2 decades I was with them. And, 5 to 10 years into it, I was running the construction for the entire portfolio of McKinley's assets. And we, at one point spanned 21 states, and I was flying all over the place and doing design and construction with them, and then grew into more of an operations role. I did a ton of commercial, had a ton of commercial experience. I ran real estate portfolios of multifamily on the operations side, where I was responsible for, everything, operations, sales, marketing, construction. And when we met in Tampa, I was on a special assignment. We carved out and started a business within the business with McKinley, and that was called McKinley Hyde Park, which you see today everywhere, which was a branded, basically a bunch of smaller buildings, 4 units up to 80 units was the largest in that portfolio. And I just created a whole business within a business and, did a lot of design work at the time. We had a team and, people working with me and working for me. And we really transformed all of those buildings. And so what was funny is when I left the company, I put, just on LinkedIn, I was launching the Schaller Group. And I thought, okay, will I go out and find some deals? What am I going to do? And literally within 5 minutes, I had a text message. Somebody said, look, I just put a 12-unit building under contract in downtown Orlando. I'd love for you to look at it for me. Tell me what's wrong with it. Tell me what I have to do to reposition it in the business setting, and then give me a design plan on what we would do to renovate it to add value. And so, I come back from the weekend, and next thing you know, I'm walking that building, putting a whole plan together. And, my word got out on the street that it was a freelancer at that point and doing my own thing. And next thing you know, I'm coming back over to Tampa. And now at this point, I've renovated, 160 buildings throughout,
wow.
Tampa, Orlando, a little bit out of state, but, mostly Central Florida, Gainesville, Ocala, a little bit down south as well. And, I'm doing that. And, so people remembered me for that from my days back at the old company, but that really is kind of how things got started with what I'm doing now.
Is it still mostly smaller apartments, Jason, or are you doing all sizes? All
sizes, man. I just left a 640 unit deal in, north of Tampa this afternoon. I'm doing stuff, I've done some small 4-unit deals in Hyde Park, but then I've done, 350, 400 unit up to 700 unit deals. And, it varies at this point.
Yeah,
so.
I've seen some of those buildings in Hyde Park. I mean, you did a nice job of taking older buildings and really making them appealing, and they're clean.
Yeah, thanks, man. It's a lot of fun. I mean, there's really not a building, I think, in Hyde Park or Tampa at this point, and Orlando, that I haven't seen at some point. So, but the ones that I've been able to renovate and do some work with have been pretty special and fun to do. And I just love what I'm able to do with that, and now able to do with our own buildings as well.
So you're doing renos and you're doing syndications. On your syndications, are you looking specifically in the Winter Park, Orlando market, or are you anywhere? Are you agnostic about location?
No, you know what? I see benefits in a lot of locations, but where we've kind of positioned ourselves, we're calling it, to ourselves and our investors, the golden triangle. So, we're focused in Orlando. We go up to Gainesville and out toward Tampa. And so far, we have deals in Orlando. We have deals in Gainesville. We have some deals in Ocala. We're getting ready to close on a deal in Plant City. And some stuff here in, so it's really focused on what we're calling the golden triangle, which really the I-4 corridor, which is, an extreme and crazy growth market, and will continue to be that way from now until 2050 or whatever, with the amount of people moving into Florida. That's our focus. Central Florida is truly our focus.
So it's really a tight market to find multifamily. How are you finding these deals?
It's a great question. My partner and I, coming from the corporate world and dealing and working with a monster and a giant here in Florida, which was McKinley, we've got years and years of contacts. So that helps for us because we've got a lot of broker contacts. We also have a lot of contacts with owners that have worked in the space here for a long time. The other part of it too, with me on the renovation side and everything I've been doing, every one of the brokers in town that you guys are all familiar with, has seen what I've done in the past. They've seen what I've done in the last 3 years. And so usually, even when a deal's getting ready to go to the market, they're calling me and saying, hey, what do you think we can do with this? How do we renovate it? What do you think capital wise they're going to need if they're going to reposition it? Check our math. Tell me if it's okay. And a lot of times, we get lucky. We get some first looks at some of these deals, before they hit the masses. So, we're out there pounding the pavement like everybody else and trying to get off market stuff and knock on doors and drive buildings. And you spend hours upon hours and miles in the car. But, really just using all of our relationships and connections that we've had for the last 20 years in Florida to find deals that fit with what we're going for.
Are you still doing consulting on refits, on remodels, people wanting to purchase?
Oh, yeah. Yeah, absolutely. I get that a lot. There's plenty of deals. I've looked just in the last couple of weeks for sure. Somebody that has a building under contract or they're looking at it and they call and get my feedback on it. And I go out and I do an assessment for them. I'll do some due diligence or I'll put together a full plan. Everything from a full branding plan, which would be renaming the property and coming up with a theme and a name for it to, seeing it all the way through to a full renovation. But yeah, definitely. I'm still consulting and doing that.
And do you do any ground up development?
You know what? That's a great question. We actually broke ground in the middle of November on our first ground up building in Gainesville. We have an existing 82 unit deal in Gainesville that was purchased almost 2 years ago now. And one of the buildings on that property before we purchased it started to fail on the foundation, and they tore the building down and never rebuilt it. So it sat for years. We've gone back now. We put together a plan with the city, and we're building ground up construction and building an 18 unit building, which will be a prototype or a trial to what we're hoping to scale throughout Central Florida, which is going to be workforce housing. And we've got a whole plan put together for it. But yes, we've got right now 5 current development deals under contract where we've got land under contract, and some further along than others where we're going to build workforce housing and infill locations in, markets like we just discussed. So yeah, definitely.
So is it even possible to build workforce housing in this market? Everybody's been going to Class A multifamily because the costs are high. The land cost is high. The construction costs high. So the only way they figure they can come out is by building Class A. But that's not where the huge demand is. The huge demand is in middle to lower income.
Absolutely. Yes. And so what we do is try to get creative. So our next development that we'll do is in Gainesville. It's in an opportunity zone. We bought a busted condo deal, 30 of 32 townhomes. We're working to pick up the next 2, which we'll make happen. But that came with a baked in 5.8 acres of land with the deal. And we're going to be able to develop 75 apartments there. And as you know, a lot of the reason that it's hard to build workforce housing is because your land costs and your basis for development is so expensive because the land's so expensive.
Yeah, of course.
So, what we do is really try to be creative and purchase existing deals that have some excess land that could be developed. Maybe it was already entitled sometimes, or it's already zoned for multifamily, and we can do that. And then we're also getting creative and we're not looking to build anything like a Class A building, 250 units or more. We're really, truly happy building something 100 units or less, and finding small parcels and locations where we can be creative and maybe create on a roadside, retail location up front, and put our multifamily behind it and split up the parcel and make that work. In our mind, and I think in the way the world's changed, when we started out, before we got started today, talking about technology and how it's changed. Where one way technology has changed for the good is you no longer have to build your apartment building on the corner of Main Street and the next busy intersection to get traffic. Google Maps, Waze, and GPS coordinates and social media marketing and different forms of marketing have taken this to a different level where now anybody can find your building no matter where it is. And if you've got a good brand and a good location and you're close to things, you can build in some spaces that people wouldn't normally consider for multifamily development.
So what does your financing look like on these development deals? Are you going through traditional bank financing, or is it Freddie Mac, or some of the agency that is out there? How's that working?
Yeah, no, great question. So, anything that we're doing, especially, just speaking specifically to the deal that we have now, we usually do some sort of bridge financing with the traditional, bank financing to acquire a deal. And it's like the existing land deal that comes along with the other existing apartment building that we purchased. And then what we do is we'll go through a traditional bank to do construction financing and finance the project. And then once we get it built and we stabilize it, then we take it out to the market. We go long-term Fannie, Freddie, or HUD on our long-term financing. So all the stuff we're developing too, we're not developing this stuff to, hold it for 3 to 5 years and then flip it to the market. We literally what we want to build, we want to build and keep forever.
Talk to us a little bit about the student apartments. I mean, I'm assuming it's a student because you're dealing in Gainesville, which is, University of Florida, the largest university in the state. But tell us a little bit about how you would handle the student apartments differently than perhaps the workforce or your traditional Class B apartments.
This is great. I love that you've asked this question because we're going away from student housing. So even the deals that we've purchased in Gainesville, although most people would think, it's Gainesville and it's student housing, the deals we're buying are right next to the Shands Medical Center. And so our target market is not the student, but we're targeting the people that are working at the hospital and working in the hospitality industry around it. And the other building that we have just up the street did, typically in the past has been operated as a student housing project, but with the growth in Gainesville and all of the new bright, shiny student housing stuff, we took that and we went from the, bedroom leases where, per head pays their lease and has an individual lease. And we took it right back to traditional market workforce housing. And we are leasing to the market and not targeting the student population. We're really just trying to target the base of the businesses and the people that actually have to get up to and go to work every single day and, clock in, clock out, and come back and have a nice place to live. So we're really not in the student housing market at all.
So when you say on the other side of Shands, are you talking about over by Williamsburg apartment in that general vicinity?
So really, we are literally right across from Shands Hospital with two of the assets that we have. You can see the medical center. In fact, that new hotel, the Hotel Elio that they've built right on campus right now. If you're in the hotel, you can look out and you can see the buildings that we have. And they built a student housing building project next to our building called the Osler. And, so that's right in front of us, but it's all literally, you can pack your bag, walk across the street, and you're on the medical campus.
Yeah, so that's interesting. The student housing has been challenged anyway over the last year, so it might be a good time to convert some of those buildings.
I think so. I definitely think so. We've been surprised. We've been really surprised. It's been great. A great market for us. We're staying full. Our collections are strong, and even with COVID, we're full. So it's been a very, very good market for us.
Jason, talk to us a little bit about cap rates and where we are right now and where you see them headed.
Oh, wow. I'm probably not the best guy to talk about cap rates, being the construction guy. What's interesting for us is with our strategy of long-term hold, we don't even focus on cap rates half the time. Right now, I think they're crazy, right? And especially for what buildings they're selling for. And, if you look at the trailing 12 with some of these mom and pop owners and the people that are trying to command these really high sales rates right now, sales prices on these deals, the cap rates are crazy. I've seen some deals out there that are lower than 5% on some when you look at it, right? But I think if you look down the road and you look in the future, and if you're going to do the right thing with the property, there's still good deals in Central Florida. And even though it's a hot market right now, if you're out there and if you're able to put it together, there's not many other places in the country that can say they got 1,500 people a day moving into town. And although right now with COVID and with other things, it may be a little slower, it's going to ramp back up. And so, even though cap rates are super low right now, and you look at your trailing 12 on a lot of these deals and it makes it look totally insane, if you look at the future and if you look at the market and what we're able to get, if you slot in between the Class A stuff and the really, really crappy stuff that people just, run into the ground, you can still buy and find deals. So.
Yeah, it's interesting. Albert from McKinley was one of the first people we talked to about, because most of the folks that we talk to and we deal with, they're like, I want to have a 5 to 7 year hold period. And so they're looking for that value add. They're going to stabilize the property, increase the income statement, the profit and loss, and then they turn around and sell it with an increased revenue stream, and that's how they're adding value and making money. And we asked Albert what his holding period was. He goes, what do you mean? And well, was it 5 years, 7 years, 10 years? What is it? He goes, no, it's forever. Right?
Exactly.
The holding period is forever. and it was kind of hit me in the face, because there's some of these folks that they have this, 5, 7, 10 years, whatever it is, their holding period, and trying to get out of it. And Albert's like, we don't care. And it sounds like you're taking the same approach, which is, listen, if you're getting 1%, 2%, 3% bumps in the rent consistently, it doesn't really matter if you're buying at a 3 or 4 or 5 cap. You might have to hold it another year or two to get to, even if you're overpaying for an asset. But does it really going to matter when you're 20 years down the road that you might have overpaid for it by 10%? And that was his philosophy. And I get it, because you guys are buying areas that are in ultra aggressive growth areas, hot markets, right? And so you can't really see. There's no visibility for that market ever being disrupted unless there's some sort of major event that we can't foresee right now. So it's an interesting strategy, Jason. You guys have woken me up to it.
Well, yeah, definitely. And obviously, with what you just said there, I mean, what Albert did at McKinley and what we learned to do at McKinley, it made sense. And we saw the benefits of that strategy and happened to be there for almost 20 years to see it, really, really flourish. So yeah, to us, it just makes sense. I mean, these buildings too, you buy a lot of these old buildings, you can't build those buildings today. If you buy the right building in the right location, everything else around it, the long-term trajectory on real estate and the returns on real estate are fabulous. Plus, if you're owning it forever, you're constantly paying down the debt. And the longer you own it, the wider that gets and the more money you can pull out on refinance events. I mean, there's a lot of benefits to owning real estate long-term.
Yeah, and I like your strategy of going into an opportunity zone, because then when you eventually do decide to sell, it's going to pay dividends in capital gain reduction.
Amen. Yep. You don't always get those opportunities, but when you do,
if you'll pardon the pun.
Yes, exactly.
So, Jason, you spoke a little bit about the Golden Triangle. Are there other areas in Florida that you feel bullish on? I know you're focused mainly on that one area, but just curious.
It's a great question. There's a lot of calls to go out to the beach. And what's been interesting, too, in my business is just seeing when the phone rings, who's calling and where they want me to go. So, I've got that going for me where I'm seeing where a lot of other people are focusing their attention. But what I'll be honest about is a lot of those people are focusing their attention are people from out of state. They're people from California and New York that have a ton of money, number one. And number two, they, are seeing like those are still really good opportunities in their eyes compared to where they're coming from. And I think Florida in general is going to do really well, but we're really, really stuck on just focusing on what we know and where we know it. We've done some stuff on the beach in our past out toward Daytona. That didn't go that great, quite honestly, for us. It's tougher. All the beach markets have been a little bit tougher to operate on. Now, I do some of this fee work for other people, and I see what happens out there, and I've been surprised. I mean, right now, things that are happening on every coast are great, and there's money to be made there and value to be added. We'll never operate in South Florida. Miami is basically just New York with better weather. And, we've always focused in our past on, tertiary markets and markets that are growing and growing strong. I don't think you can go wrong if you focus anywhere up and down the I-4 corridor.
No, I agree.
Honestly.
100%.
So we're just going to continue to focus on that.
It really is probably the best real estate market in the country, in my opinion. Talk to us a little bit about the syndications, how you structure your syndications and that sort of thing.
Yeah, sure. So, we're on the sponsor side, and we raise our equity to come up with the equity for the deal. We pay, preferred return to the investors. Our preferred return is paid at 8%. We return all the capital. We don't take any fees on our syndications, unlike a lot of people where they take an acquisition fee, they take an asset management fee, they take a property management fee, a construction management fee, all that stuff. We're fortunate and we really feel like we want to take down a deal and we want the investors that are invested with us to get the benefits of working with us and give us the incentive to work our butts off to add the value and to go to a long-term financing event that pays off the initial capital and the initial investors and get them paid back before we start making a dime. So it's a long-term hold strategy. So any of our syndications, any of our investors, they put the money in, we pay them back, we pay them their preferred, and then they get ongoing cash flow in the deal with us in perpetuity because we buy and hold forever.
So can I ask one question about the syndication? What happens if an investor wants to sell at some point and your strategy is long-term hold? Is there some mechanism for them to be bought out, or how does that work?
Yeah, we've had a couple of situations with that where somebody just wants out. And typically, we're not in a lot of these situations where we're currently set up. Our investors are a lot of friends and family and accredited investors that they know we're going to return the money quickly. But if somebody wants out, we've had a couple of situations where we've bought somebody out of a deal and, been able to do that. And that's been okay. But, literally most everybody that's been in a deal with us so far is holding on because they know that their payback is pretty fast. We work really, really quickly. And then once they get their money back, they're free to do what they want with it. And typically they reinvest in another deal with us. But, literally, we're really buy and hold guys forever. And so there's not a lot of other people out there doing that. So it's a unique situation for investors as well.
And so who are you using? Using somebody here locally to do your syndication packages, or is there various people you're using to do that?
No, so ZKS works with us out of downtown Orlando. They've been great, and puts together all of our PPMs and all of our paperwork or operating agreements for us, and anything that you got to do you got to dot your I's and cross your T's when you're doing syndications and raising money with anything. But so yeah, we're backed up. We've got a good team that supports us on that end. And then, every single deal, they're usually generally the same, but a little bit different. But there's a split between the sponsors and the equity, So we've got support locally here with our on the legal side.
And so ZKS, are they also doing like the feasibility and financial stuff, or are they only doing your documentation?
Documentation. Yeah.
Okay.
Yeah. My partner was, did all the acquisitions and did everything. So he
runs the numbers. Yeah.
Yeah. We're when it comes to like cover, we're basically, we can almost run ourselves like an institution when it comes to how we vet deals and what we do with deals and, figure things out. And then we've got third parties that help us with everything, of course, and relationships there that we've had forever. But, we're very well situated with the partners we have to handle a lot of the back end stuff, and then we've got good partners on the legal side to support us.
So, Jason, what is your strategy for branding and reworking properties to bring them up to the level for investors?
Yeah, you're looking for that value to add. So, how does that work, Jason?
Yeah, this is something guys, I'm really passionate about, and I have been forever. And I really believe this. This is why we focus in the workforce housing sector and everything else. I feel, and I mean this sincerely, in my bones, that no matter who you are and where you live and how much you make, you have, and we have a duty to fulfill providing great housing and a great place to feel proud about when you come home from work every single day, or when you have your family over and your friends over. No matter what the size of that check is that you're writing, you should feel good about where you live and the building and how we take care of you. So my branding strategy, really, I dive deep into all this stuff and I try to tell a story. So I'll do research and history, kind of like go back in time on any building and look at the location, look at the history of the building, who owned it. We've got some historic buildings that we own in downtown Sanford. We got the old rent rolls from the Historic Commission. We looked up who owned it. We looked up who lived there, the number of families that lived there, and really tried to dig in deep. And so what I'll do is I come up with a strategy for a name that ties to the building, and then I design every element of that building around that theme and name and brand that building. So when you come home at night, I did one really, really cool building in St. Petersburg, and it's called Leland Garden. And I'm doing another one for the same owner right now in Tampa. It was the Courtyards of South Tampa. You guys are probably familiar with this deal.
Oh, yeah.
Yeah, and so I'll talk a little bit about that one. We're calling that building, that's going to be called, it's on Euclid Street. So Euclid and Dale Mabry. Euclid, if you think of Euclid's geometry, this is the rabbit hole I went down to try to find out a way to put together a theme and a brand for this building, right? So we're calling it Alexandria Garden because Euclid was Euclid of Alexandria, and he's the father of modern geometry, basically. And so what I did is design the whole building with the design team where everything revolves around geometric shapes and tells the story of Euclid and ties you back. And we changed the design and the facade on the front of the building. And so everything in that whole courtyard, when you walk up, you pull up in front of the building and then walk in through the main hallway into the courtyard, will all tie to the theme of Euclid and Alexandria. And, subtle, but to me, if you're coming home with friends at night, you're going to sit and have a glass of wine in the courtyard, and somebody's coming to visit you for the first time, they're not just coming to your apartment. They're coming to Alexandria Garden. And when they get to Alexandria Garden and you sit and have wine, that person can point out and they can tell you about why we designed the pool deck with the geometric shapes, why we designed the front entry, why we have a dodecahedron sculpture when you walk in, how that ties to that theme and that story. And take this to another level because you guys are in the business, but that person who is selling that building or leasing that apartment to the person walking in the front door for the first time, to have a story that they can tell to that person to make them feel like, I'm not just coming home, I'm coming home to Alexandria Garden. That's what I'm all about. So I like to provide an experience. I believe that multifamily and this business is not just housing, it's a service business. And if you provide a good service and you can do something really special for people, they feel a lot better about writing that check each month and handing you that check.
Yeah, it's like white tablecloth dining for apartments.
So geometry is your angle, in summary.
Another pun?
Don't encourage him, Jason, please.
No, but yes, it is. But here's what I'll say too. Just because this sounds fancy that we're going to design this whole building and it's going to be designed around, you can do a lot of this stuff and you can create a story and a theme without spending a lot of money. I really feel like you got to put that energy into the building. You got to put that thought into the building in order to really sell it and believe in it. And, the residents believe in it. They'll take care of it. The people you have working for you, the property management team believes in it. The salespeople believe in it. And it works.
And gives a perception of value.
Amen.
As opposed to trigonometry.
I
love it, man. Do you want to do a comedy show after this?
No, please, Jason, don't encourage him. Jason, I really appreciate you taking the time and that you're with us today and telling us about your business. Tell us about what you might be looking for. Is there anything we can help you with? Maybe our listeners might be able to help you with?
Yeah, man. I feel honored to be back on the show with you guys, and you guys have been kicking butt. And how long have you been around now? 6.5 years?
Yeah, it's been a while.
Long time.
Yeah. But, great content. I listened this morning to the podcast about the LinkedIn post, and that was great. I sent him a note, and you guys do some really great stuff. You really serve the market. You cover all the topics. You've got great people that show up on the show. And, the only thing I could ask is, look, if you heard something you like here, then feel free to reach out to me. So that's it.
Well, on that topic, how can people reach you?
Really easily. You can call my cell, right? Or if you look up the SchallerGroup.com, you'll be able to find all my contact information there. And what I would really say is, follow me on LinkedIn, honestly. I'm on there all the time. I'm posting all kinds of stuff about what we're doing with our own investments, what I'm doing with all of the cool renovation and branding stuff and, things I'm doing. And, I'm very active on there. And I love meeting new people and reaching out and growing the network. So, follow me there and find me there. And I'd love to hear from you.
Awesome. Jason, thank you so much for your time, and look forward to hearing more about your success going forward. It's been a great ride so far.
Yeah, Jason, great catching up, and we're so proud of what you've done. And, when you speak after a couple of years and you see the momentum and the achievement, it's terrific. So good luck and good talking to you again.
You guys are too kind. Thank you very much. And I really appreciate the opportunity to speak with you guys tonight.
And that was Jason Schaller talking multifamily in the Central Florida market. What were your thoughts with Jason?
So I teased Jason because I said he was successful because he had a lot of angles. But the truth is, Jason has really paid his dues. He's spent a lifetime learning construction and redevelopment and due diligence and inspection and marketing and branding. And now he's putting that to work with his own entrepreneurship. But the reason he's being successful is because he's taken the time to do that. So it just illustrates how important it is to have that knowledge and those tools. And if you don't have the tools, get a team or people who do, because money isn't enough. You need to do things in the right way.
And we really like Jason a lot. I would strongly encourage anybody to connect with him who's interested in multifamily properties, to connect with him on LinkedIn. He is very interactive. He says he will respond to you, and he's a great guy. He's a wealth of information. He's one of the most knowledgeable guys about certainly the bones of a multifamily structure than in anybody I know. He's one of the most knowledgeable guys. So I would strongly encourage you to reach out to him connect with him on LinkedIn and share ideas with him. Stephen, Jason's a great guest. We're lucky we'd be able to get him back on. Where can folks listen to other great guests?
Well, the only place to go is our website, www.investfloridashow, and download the app from the app store so that you can listen while we're mobile. I mean, we have people listening from all over the world now and also locally, and it's some great education, and we're all there to help each other.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Steven Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.